We're looking at the stock right now down about 4%. Is it disappointment with the numbers, or is it because it's already gained in recent weeks, up about 40% year to date?
Yeah, I think it's really to do with the numbers. A lot of people have been holding Moutai as a kind of China recovery play. And as you point out, you know, the revenue did grow 8.5% in the third quarter, but that's quite a disappointment versus consensus expectations. They came in at the top line about 3% below us, about 6% below us at the bottom line, and we were already about 6 or 7% below consensus. So I think it's really the recovery hasn't been nearly as strong as many were hoping for. And as you point out, you know, stock is really priced to perfection. It's at a record high multiple compared to its own history, and also relative to consumer staples in China.
You talk about how you're underweight the stock. What would prompt a reversal of that, and what could prompt a higher projection of the stock price? Currently, you have a target price of 1370 Chinese yuan.
Yeah, I think the issue that we have is the stock is really priced to perfection. The market is expecting an ex-factory price increase to occur imminently. And these ex-factory price increases tend to be very few and far between. The last one occurred 34 months ago, and they've only had 8 over the last 17 years. So there's a lot of risk around the ex-factory price increase. We do expect them to increase the ex-factory price relatively soon, but the expectation is already there in the stock price, and we see very little scope to go beyond around a 20% ex-factory price increase over the next few months. So really, for us, the potential upside driver remaining would be around increased direct sales. So Moutai has been trying to change the way that they sell their key products, cutting out distributors and selling direct to large customers, which is a very good strategy. They sell at about a 35% price premium via that channel. But unfortunately, while we're seeing an increase in the amount sold in their direct definition, we're actually not seeing any benefit to the P&L from that. And we think that's really driven by an increase in sales to their internal parent company that's masking the numbers.
You talk about how direct sales has become even more important now. What's holding them back?
I think there's two things. One is that in the report, they talk about direct sales, including sales to their parent company as well as sales to third parties. And what we're seeing in this result, as well as in the first half, was an increase in the mix of sales to their internal group parent company. So it's really about the type of mix. These are not real direct sales to third parties because they like to internalize the value within the group. So that's one of the first issues. The second issue is that the more that they sell direct to third-party customers, the more that they cut out distributors, the more it harms the distributors' interests. And we still believe that there are some very influential distributors there who are resisting this and who are using their influence to slow down this strategy.
You and nobody else makes this sort of baijiu like this company does, but so that of course makes it stand out. It's a bit of an outlier, but certainly if we look at some of the other alcoholic beverage makers in this part of the world, did they get your thumbs up over Kweichow Moutai? Companies like Budweiser APAC, TSINGTAO, China Resources, those sort of companies.
Sure. Yeah. Look, overall, alcohol valuations in China are very high. We do like Wulan, but that is a very high valuation as well. In the beer space, we like Bud APAC. You know, Bud APAC has by far the strongest premium, super premium portfolio of brands and the strongest capability in building those brands. And that's where all the growth is in the beer industry. So it's not a cheap stock. But we do think that there's a very good, sustainable, superior top-line and bottom-line growth outlook for Bud APAC compared to the other brewers. CR Beer and TSINGTAO, we have underperform ratings on those stocks. For us, the market is paying for a very sharp inflection in their margins, a real change, a 360-degree turn in their strategy. They're currently focused on low-end beer. Around 70 to 80% of their volumes are low-end. and the market is pricing in a very swift pivot to selling predominantly high-end beer, and for that to drive margins. We think they can get there over 10 years or so, but we just don't think that's possible to or likely to happen in the next 1, 2, 3, 4, 5 years. So we view those stocks as very overvalued.
Euan, you've alluded to already, but what if there's another anti-corruption drive in China? How bad could things get for Moutai?
Yeah, well, we've definitely seen a step up in the rhetoric over the last 6 months or so. The government mouthpieces, the People's Daily, etc., have been talking about this a lot more. The Kweichow government has been actually getting quite active and launching investigations into the consumer price of Feitian. And most recently, the Central Commission for Discipline and Inspection, that's the top anti-corruption body for the Chinese Communist Party, weighed into the debate and started linking Feitian pricing with corruption and corrupt officials. So we definitely have seen an increase in the rhetoric. The biggest risk in our view is that this sparks a sort of second anti-extravagance campaign. If it was to become politically, or if it's become difficult for the political and military individuals to consume Feitian, we would expect that to cause a demand shock for Feitian. Around 30% of Feitian is currently consumed by the government and military by our estimates. That would be quite a material demand shock. That said, we think the bigger impact would actually be the supply shock, because there's very large inventories or speculative inventories with distributors who are holding the product, hoping for a price increase. If there is an anti-corruption campaign Mark II, we would expect those inventories to be released to the market and cause quite a big supply overhang. In many ways, that would actually achieve the goal of the government of bringing the consumer price of Feitian down for a period of time. So it could actually be well in line with what the government's looking to do, but it would cause havoc with Mautai's P&L in the short term.